welcome back to day 2 of the second edition of the world's largest FinTech Fest, Global FinTech Fest, organized by Payments Council of India and FinTech Convergence Council, the two councils of Internet and Mobile Association of India, along with National Payments Corporation of India. This fest is presented by the Ministry of Electronics and Information Technology, Government of India, Reserve Bank of India, and is supported by Niti Aayog, Startup India, and Invest India. I would also like to take this opportunity. Our other partners, our platinum partner, AWS and PhonePe, our diamond partner, Cred, our country partner, Australian government, our track partners, HSBC India and Refinitiv India, and our sessions partner, the UK Government Department of International Trade. The second edition of the Global FinTech Fest revolves around the theme FinTech Empowering a Global Digital Economy and provides an in-depth understanding of the latest business, policy, investment, and technology developments within the FinTech landscape globally. With that, it is with great pleasure that I would like to introduce to all of you our next session, which is a panel discussion on the topic Deep Technology, Use Cases of Emerging Technology in FinTech Innovation. This session is specifically partnered by AWS, and for the same, I would like to welcome our esteemed panelists, our moderator, Mr. Amitabh Nagpal, Head of Startup Ecosystem, India, Amazon, other esteemed panelists, Mr. Ajey Gore, Operating Partner, Technology, Sequoia, India, Mr. Sujit Unni, CTO, Paysafe Group, Mr. Deepak M. Sharma, President and CDO of Kotak Mahindra Bank, and Mr. Sumit Gwalani, Co-founder, FEE. We welcome all of you and thank you for being a part of this panel today and taking our time. A side note for all the delegates who are attending this session right now, you can post all your questions and all your doubts in the chat window on the right-hand side, and our panelists will try to respond to them at the end of the session. Over to you, Mr. Nagpal.
Thanks a lot. Good afternoon, delegates. It's a pleasure to be the moderator of this panel. The last, I would say, the few years have seen an innovation in FinTech. That few years would have been unthinkable. From the non-banked getting banked, from the people who were not getting, who didn't have a credit history, to them actually being able to get loans. Right. So we've seen banking change, we've seen consumer lending change, and this phenomenal panel of entrepreneurs, investors, and some operators here with us will share what next is going to happen. And with that, I'll ask the first question. My first question is directed to Sumit. Sumit, how is BNPL, which is consumer lending, and how is consumer lending changing, and what is BNPL, and how do you see BNPL further changing consumer lending?
BNPL has been the buzzword around right now for, I would say, more than, I was going to say a few months, but it's around a while. What is BNPL? Well, let's just start with like a very quick one-line summary. It's your ability, and it's been around for a time. BNPL is the new buzzword for it. It's being able to repay later after a certain date if you have at very zero interest or at low interest, or being able to pay in installments. Now, how has BNPL really changed, especially in the post-pandemic world, is allow the consumers to get, in terms of when there's a liquidity crunch for a short duration, to still buy the products that they want and then pay at a slightly later date, or through, a set of reinstallment options. Now, this has been around in terms of credit card and others, but what BNPL has allowed to do is ensure that a lot of users who either didn't have access to credit cards or were afraid that credit cards will take them into a lot more debt, BNPL provides a much more convenient and a flexible option to ensure they get what they want. And that's the landscape, as you've seen, is globally changing because of that. You've got, acquisitions happening. Square in the US bought Afterpay for what, $30 billion. You have Klarna valued close to $50 billion. And even the Indian market, which is, probably, as insiders say, $2 to $3 billion right now doing in BNPL, is expected to go like 15 to 20x in the next 5 years. So opens up a huge opportunity, both from a business sense and as well as a consumer sense, in giving them different options where they can actually go ahead and buy things in a much more flexible way.
Thanks, Sumit. Yeah, Yeah, this is a nice this next thing to your question. Fine. See, you being a CTO, you sit at a very interesting desk where you see new opportunities coming in here, and here is where you see so many acquisitions happening in the NPL. So, how do you look at as a CTO as well as an part of a huge investment firm, the opportunities in BNPL? When were you able to look at from a futuristic perspective the BNPL trend, and what is next for consumer lending? Yeah, Jay, can you hear us?
Yeah, I can hear you. Sorry, I was okay. So one of the things which I see BNPL as a microcredit card. So basically, earlier to issue a credit card to consumer, you need to do multiple various steps to verify whether there is credit worthy or not. But BNPL actually allows you to look at their micro trends within wallets within on your platform, and allows you to kind of extend credit for like small amounts like 1,000, 5,000, 10,000 rupees, uh, looking at their credit history, looking at their spending behavior. So BNPL is kind of democratizing the credit cards in a lot of sense. Like as Sumit already said, that BNPL has been existing for ages, but now it is more around going towards microcredit, which we issue on time, and also we have more data about the consumer's past behavior. It's kind of looking at their credit history or credit worthiness within our systems and go through it. The way I got involved in around 2016 or 2017, when we were building GoPay in Indonesia, that was the largest wallet in Indonesia at that point of time, multi-million customers on that. And one of the things which we did was pay later, which is kind of BNPL as well. And one of the driving factor was that we know, since Gojek was a super app, or is still a super app, we know their spending behavior across the ecosystem, and then we can actually figure out how do we actually unleash this microcredits to millions of customers. And that way, BNPL has been very, very important for the people who could not access a chunk of credit earlier because they had to prove their worthiness in a lot of terms to a small microcredits, and that's what BNPL is changing the landscape. It also enables crazy consumer behavior, which is like very positive. But positive in sense is that you know whether you should do BNPL for this consumer or not, and with much more confidence than earlier. So that has been a very good trend in last few years. So that's what it is about. Like, and given the UPI things which coming across, and India's economy going through crazy digitization, I think BNPL is here to stay.
Thanks a lot, Ajay. So, Deepak, that brings me to you. Fine. You see consumer credit just getting completely disrupted by mechanisms like BNPL. You've been sitting in a bank. How do you see that as a? Do you see that as a opportunity for a bank, or do you see that as a missed opportunity? And also, how do you see the tech enablement that makes BNPL possible for a bank or for startups? What kind of tech actually made it possible that we have BNPL?
It was like Ajay mentioned and Sumit. I think while BNPL is slightly more hyped, but as a concept, if you look at it, a telecom company, if you took a prepaid, you were paying upfront, a postpaid, you were consuming data or voice, and you were settling it the end of the month. Or utility company, our power bills, and whatever we pay. I mean, typically you were consuming a product or a service, and as a convenience, you paid, say, after a 30-day or a 60-day. In many ways, BNPL is going back and addressing two segments. Largely, while we are thinking this as a credit segment, but I would call it more than credit, it's a convenience part, which is what is where we see a larger play. Because think of it, if somebody is buying, say, ordering food on Swiggy for $200 and signs up for BNPL, no lender will be comfortable necessarily doing underwriting for a 200 rupee of credit. But we all know that consumers who are availing the credit, if they really don't have $200, you are worried of lending, right? But if you know that the person has ability to pay or intent to pay, but is looking at this sheerly as a convenience, then I think the market and opportunity is large. And as all this data finds its way back in the bureau, I think what we are seeing this happen is it's creating a large formal credit network of the first time, or those who have a thin file today and they were not formally in the credit and lending ecosystem. And I think as a bank, we see this as an opportunity of broad basing the Indian financial service ecosystem, because BNPL at a small value, as consumers know that if they default and it can hit their scores adversely, they will maintain probably a tighter discipline. But yeah, if these are not maintained tight, I think some of these may not be able to get the scale that we will all love to see. And I think this is where banks, along with tech companies, fintechs, large ecosystem players in the marketplace, where the actual consumption is happening, are all working together to see how the data, both on purchase and the purpose, gets integrated with the credit that is embedded at the point of checkout.
Thanks, Deepak. I think Sujit, this brings me to what is the next? Is it like I think Deepak mentioned about convenience based. Fine. Is it like we will have credit based on just a fee or a convenience fee will be given? So do you see that as the future of consumer credit to a particular segment of population?
So personally, I mean, the trends that we see is that lending is inherently going to move away from interest margin revenues to fee-based revenues, right? For multiple reasons. To Deepak's point, there's definitely the underlying kind of dynamics around knowing the data better, knowing your customer better, and owing to that, being able to give them more stronger value propositions. But even if you look at it purely from a journey perspective, right? Typically, fee-based journeys tend to be less friction-ridden than interest margin earning, because you got to know your customer a lot better, know their propensity to be able to pay. So to that extent, I think the trend inherently is that both, if you were to look at customer experience and customer outcomes, fee-based revenue models inherently lean better to both those outcomes, if you may, more so than traditional kind of lending mechanisms that are more prevalent today. I won't pick banks in particular. I mean, lending as a capability in itself typically tends to be very, very traditional even now, right? It's only now starting to kind of gravitate towards the more forward-looking kind of mechanisms that consumers need and ask for.
Sounds good. Deepak, you working in neo banking, and there are a lot of buzzwords going around open banking. But I think one thing that is taking India by storm, and I think it's the UPI moment for banking, is actually account aggregators. Fine. Could you just lend some a very high level view of what is happening? How is that going to democratize data? What are your views on it?
I think account aggregator is the probably the biggest thing that we are seeing after UPI in terms of taking India's stack to the next level, because we all realize that India is perhaps the country that became data rich before it became economically rich. And I think this is classic case that we see compared to the Western world, where the data came much before people had prosperity. And I see this as probably the first step of opening up of account aggregator through financial institutions. But it sets the ground for a much larger data participation in the ecosystem, be it the GST data, be it your income tax data, be it your purchase data, health data that we would have read about now. There's a national health mission that is bringing in democratizing the health data. I think fundamentally it's shifting the power in the hand of consumer to say, data is the asset that I have created or a footprint that I have created. And now using this data, how do I get access to various products and services at different touch points? And I think in the initial phase, you see a handful of banks probably who have opened up. But in my mind, it requires beyond just financial institutions to participate. And as we start seeing all of this coming together, I think we'll all be able to create many new products or services on top of this, including a BNPL, if you ask me, is a very powerful thing. If we all know what do you buy and how frequently do you buy, and not just refer to a bureau. And I think many such new products will get created at the back of this account aggregator framework.
Absolutely, Deepak. And and Sumit, my question is here: you are a part of that ecosystem, fine. do you think that will lend to a, it'll lend to a data democratization, but also will it lend to a commoditization of some players in the ecosystem? One, and two, how are you going to take advantage of it, and what do you think the consumer will get value of such an initiative?
Right. So I think what data democratization really does is it now gives a play to actually innovate on deep tech. Right. To me, now you can actually help across all four parts. So there are five parts in a fintech ecosystem, right? There is, store your data, which is savings. There is, doing payment transactions, store your money, use your money. There is borrow money, which is lending. There is invest money, which is, fund stocks, overall wealth. And there is, using insurance to insure your assets in that sense. Now, with all five of these, account aggregator is here that using deep tech, you can actually innovate in every single segment, right? At Epify Wealth, we look into, helping people understand and demystify their finances and giving them the right suggestions or the tools in their hands so they can make the right decisions. So with data, similarly for a wealth product and an advisory product could provide robo advisory. You could actually make micro lending to big loans possible literally instantaneously and not have to wait for 24 hours. In payments, it can help you spend smartly. It can tell you where to spend and where not to spend. Right? So literally every single area of fintech will be disrupted with AI, according to me.
That is pretty exciting to know that once the plumbing gets done, there is going to be exciting innovation. And so, Ajey, naturally, this question is for you. Fine. Sitting at the seat that you sit in, how do you see this opportunity? Do you wait for the stack to get built? Do you wait for the plumbing to get done? Or do you actually say, no, the plumbing will get done? Let's get down to looking at opportunities in this area. And if so, which ones are you kind of looking at? And what should the audience be looking at right now?
So, if I look from the product point of view, every time you take a unstructured market and create a marketplace out of it, then things just go crazy, right? For example, you look at ride-sharing market, you look at food delivery market, you look at all those markets. What happened? What's not there 3-4 years was unstructured structured market. What these players did to create a structured marketplace where we connect the lenders with the consumers. Now, if you look at the Open Credit Enablement Network, or you look at the Deepak, which is data empowerment and production architecture, these two things, if you combine that with UPI and then bring Aadhaar, eKYC, DigiLocker, eSign, all that stuff, what it is doing is actually democratizing this market in terms of creating a very good marketplace for lenders and consumers. So while these things are maturing, and thanks to Government of India and monetary policy, it has been amazing year to see. Last 2-3 years, it's amazing to see how they are bringing so much stuff online. Correct. So if you look at this, like for example, if you look at Cred, or if you look at Bullet from Jupiter Money, or you look at Razorpay, all these companies have bringing these marketplaces for consumers to take advantage of the ecosystem, but also providing them protection against the things which were not possible earlier. And like for example, investments, finances, the biggest unlock which is happening is financial services to unbanked or less banked, and that is something gonna change the way our consumers spend more money online and spend more money carefully as well, and there are protections available for that. So I see a lot of consumer side financial services which actually look for consumers' interest and go through those over the period of next 10 to 12 months. And when you couple this with decentralized finance and other things, then like for example, neo banking is now here to stay. The pro-consumer banking is here to stay. Like you could not think about transferring money earlier within seconds. Now you do that, right? Payments and a lot of other things. So it is. I think it is a very good opportunity for different kind of marketplaces to assess creditworthiness of consumers and also provide provide a single point of view. For example, sahmati.org.in is an amazing initiative in terms of account aggregation, which also gives not only the banks but also the consumers an overall bird's eye view on what is happening in their personal cash management space. So I think possibilities are infinite now from that point of view.
Thanks a lot. So that you've been a CTO, you see so much, you see tech, and then you see so much change happening. Fine. This is just like music, that you can see that through tech you can disrupt so much. So from a layman's perspective, if you could, to the people who are listening to us, fine, if you could explain how this data and how this tech that is coming in new just helps you think about creating new products, which the rest of the panel are talking about. Fine. So what kind of new products that you think will get created, and what is the tech behind that in a very simplified way?
So, I mean, I think all the trends that we spoke about, right? The democratization of data, open banking, they're pretty much touching every part of our ecosystem today, right? So when you kind of look at, even if you start at the front of the door and look at things like customer acquisition and things like that, right? Increasingly, right? The whole element of doing hyper-personalized loans is what's kind of driving acquisition in that space. And over there, it's nothing but financial institutions starting to look at a customer's transactional data as opposed to having to rely on third-party credit bureau data, right? And that gets enabled largely through both the democratization of data as well as the whole element of open banking and account aggregation that powers that whole ecosystem. As you then start to kind of go down that, that life cycle, if you start to look at things like credit decisioning, again, within credit decisioning, with the fact that you're looking at transactional personalized data, your ability to be able to offer an optimized rates improves. And more importantly, I think the tech has now started to build out the product ladder, right? Which is that Sujit comes through, okay, he wants a loan. You score him, and maybe he's not good for a credit card. But then again, he may be good for a BNPL offer. He may be good for a split in 3. He may be good for an kind of this thing. But the element is that you focus on the customer outcome, and declining the customer is like pretty much, the very last kind of option, right? Even down to the point where today financial institutions are now kind of hooking up among themselves to kind of create turn down programs so that the customer still gets what they want, right? So there's a big impact there. And then if you start to go into the third piece of it, which is just the monitoring and the servicing of the customer, again, all of this data starts to play in, right? And the tech today kind of allows for both sides of the house, right? Which is both real time as well as off rails kind of management, right? So customer goes to an Apple store, he buys a phone, you very much want to do real time decisioning, you want to do real time fraud, because if he takes that phone and walks away, he's gone. But then the very same aspects of monitoring and decisioning and fraud management are very different when a customer walks into a home improvement store and takes a loan for, kitchen to upgrade his kitchen. In that scenario, you are going to the customer's house, the element of fraud and the synthesis that drives what kind of decisioning and fraud management you do is very different, right? Because you know where the customer is and the likelihood of fraud is lower. So again, I mean, how tech gets deployed at almost at the persona level in each of those user journeys is something that most firms need today, right? Like I can't see any fintech kind of saying, hey, we've got this and not the latter, or vice versa, right? And then I think eventually servicing in itself also will continue to evolve, right? Servicing is very heavily now moving to persona-based servicing, right? Less to do with actually looking at a set of rules and working off an operation manual, right? Today, you've got to know your customer, and you have to give both your, I would say, assisted servicing as well as your self-servicing channels, the ability to be able to actually do persona-based servicing and less to do with a classic kind of operations manual. And again, the tech over there in terms of understanding the customer real time and responding to the customer's ask real time becomes that much more relevant.
Got it. No, I think very rightly said that there is hyper personalization happening, and the more you personalize, we all know, the more you can address the value prop of a customer, because fundamentally, if you segment the customer in a manner granular as possible, your value prop is sharper, your product market fit is sharper. But you're saying the ability for tech to do that is very, very good. The ability for tech to actually do instant ratification of a customer's loan, etc. And so these are the new opportunities. While person can be shopping an Apple store, and person could be shopping at, say, Do It By store, where if he's shopping for a bathroom or a kitchen refurbishing. Fine. I think these are new use cases that will definitely come up, and as the rails get much better, things will happen. Now, one question is, we are seeing a lot of innovation happening. Fine, everything is happening on the cloud. What about security? Fine, because I think the biggest, and this is a question that we can go from Sumit first to you, that if you can't rest and open, if you are a startup and I can't trust my data with you from a security perspective, we are seeing so many SMBs being hacked. Security is becoming a larger thing. How do you look at security? How do you create trust for your enterprise, and how will this trust be scaled up?
Great question. Like, having started my career as a security guy, leading security for a bunch of Google client products, this question is close to my heart in that sense, right? Like, it's both security and privacy, honestly, right? Like, how do you ensure that you are building systems out there that protect yourself, right? And I think two aspects to it, right? Like, from a organization perspective, it's about ensuring using the latest technology, right? Like, today I can tell you most apps in India probably don't even use the latest tech that's available out there to build extra layers of security out there, right? Like, so it's again, it's also ensuring that you are not only using the latest tech that's out there to safeguard it, but building proper controls in your process, right? And most importantly, giving transparency to the user, because what transparency does is it builds trust. Telling the user where their data is, right? Like, Classic is an example of account aggregator, right? Yes, you have taken the user's data to provide services to the user, but then do you make it very easy to the user to disconnect their data or delete their data instantly? Right? How do you build that transparency, control, trust, and build with sort of the latest edge security out there, not just from an infrastructure perspective, but from an app perspective too? And a combination of these two really depends on, if you can build the right team and the tech around there, then you actually can build a product that's as secure as the, biggest companies globally.
But Deepak, how do you look at security? Fine, because if there is data democratization, and as tech people are becoming smart, they are innovating, so are hackers. Fine, and in fact today papers talks about hackers becoming smart. So how there is financial data, it's not like ordinary data. Fine, in a world which is so connected, it becomes very, very difficult to manage it. What are your thoughts there?
No, I think banks, for various reasons, including its being a regulated entity, always had risk and security at the core of what we are, right? Because and there is obviously a heightened sense of, I would say, concern around the whole threat landscape that is changing. So while be it RBI or be it CERT or various other government agencies, also they regularly interact with all the financial service providers just to ensure that if there is any kind of a breach that happens across any of the institution in the country, it's a systemic risk. So I think one is, as an industry, how do we protect, and also then as an institution, each one of us. But I think the bigger challenge that we are seeing now, and that's where a lot of our focus is not about how well protected are we. I think that is something every institution does it pretty well, and they are constantly looking at the threat matrix, the whole peripheries and the constructs. But largely, we are getting into a more connected ecosystem world. So there is a merchant where we traditionally had, say, a card on file, which obviously is now going through a change. But if there is a breach at a merchant with a card on file data or credentials getting hacked, or probably a payment gateway provider who's, as an intermediary, is processing transaction. So I think what we are now looking at it is the larger ecosystem and seeing that how end-to-end the ecosystem is protected. because vectors do come through the weakest link, and we have seen a lot of times this happen through the IT system providers, vendors, and as especially we look at the remote connectivity through the VDAs and uh, the risk is also the parameters and threat has changed. So with the work from home, it brought in a very new dimension of risk than what we had traditionally when we thought everything in our data center is protected. And interestingly, the other side we are seeing is the consumer devices are getting more susceptible to hack, because like we figured out in recent months with Pegasus and all, I think injecting a malware is a kid's play now. It's pretty easy. You get a link, you just click, and you find all of a sudden access to your camera and your microphone, and everything is compromised. Or people doing those keyloggers like AnyDesk and those kind of installation. So I think for us, we continuously keep looking at all these vectors: the ecosystem, the consumer device, the whole peripheral, and the enterprise security architecture. And this is where continuously, like any firm, you always have a red team and a blue team. You try to attack systems from different places just to see whether you are able to detect and act, or if something really went through. So I think that's the best way out, is that you have to have an offensive defense system in order to stand the test of time.
Got it. Sumit, by the way, I started my career with consulting with VeriSign too. So we've got something in common. So Ajey, you got Sumit and Deepak talking about actually the perils of, fine. They're talking about device can be hacked and they can be hacked by a kid today. Data is there. So when you look at it and say, you know what, there is so much that can be done, but by the way, there is security to take care of, and security is a friction point. You talked about a red and blue team, which is red builds and blue hacks. I think there's another team called yellow or somewhere in the middle that says don't do anything. We are good with status quo. And all of us are startup guys. All of us are innovators. You are at a place where innovation is. Then how do you look at and say, will security get solved, or will somehow get managed? Is it like a gray box right now, or in parallel do you think will get solved?
It is a cat and mouse game, let me put it this way. One of the biggest things which I faced personally was not a data breach or not like data leaks or perimeter security. What we faced, and which India also faced a lot, is social engineering. So a lot of times people get a PIN. I'm calling from this bank, and you will have verification. You have to verify this. You get PIN and you get social engineered. There is a huge scam in India. The same thing we got also done. So one of the things which I realized that social engineering and other security things is more about educating customers. For example, whenever you are asking for a PIN, putting a simple message apart from PIN on the screen saying, this is what is going to happen if you enter this PIN. Like, are you sending money to somebody, or are you going to receive money? Because somebody is claiming that you will receive money if you give me their PIN, but actually you are sending money. So if you add that message with the PIN saying this message to send this money to this much, then you can stop the social engineering. We face a lot of issues around social engineering, and it is more responsibility on us as startups to actually implement more user experience around that aspect. The first thing is that. Second thing is a lot of time consumers get blinded by offers and by other things. How do you establish authenticity of your promotions and offers? So that is second thing, which sometimes we overlook, but we should totally look at it. And third thing, which I also found, apart from having all these policies and everything else, one of the things which we try to do ourselves was try to impose attacks on ourselves. Very few times we do that, like get ethical white hat hackers and ask them to go through stuff, do a regular phishing attacks, do a regular attack, and don't do it during like off hours. Try to do it during the business hours, because that's when like our attackers is not gonna wait like, okay, it's midnight, I'm gonna attack now. No. So we should simulate the real environment, same environment. So if you look at the perimeter security, which is done by policy and compliance and bunch of exercises, which all banks and all financial institutes do. But the second is social engineering, which we all have to think through and constantly look for the feedback and don't ignore a single case around that. And third thing is around figuring out how do we go about imposing attacks on ourselves and go through those agencies and do a black box or like totally anonymous hacking on our system and see whether they get through or not. So I think those three will help us a lot. And as I said, it is a cat and mouse game. There is always somebody one step ahead. It's just that we should know that they are one step ahead and be very, very careful about that. And do not overlook any sign of any kind of broken window.
Actually, if I may just add, right, like I think this is where deep tech actually helps. You can now do risk monitoring and fraud monitoring, both perimeter or application level or infra, in milliseconds today of something happening, right? You don't have to wait days. So, like a lot of social engineering stuff, actually based on a bunch of data points, can be literally caught real time, right? And I think that this is like, and that tech is just getting exponentially better day by day, which is a huge opportunity in coming months and years.
Yep. And like for example, very small thing I'll tell you. If you look at social engineering part, if you look at the transaction position which you can get by GPS, and you look at the last known position which you can get by GPS, I was like 1,000 kilometer away, then certainly somebody's trying to do a social engineering to somebody. And also keep looking at how many cluster of transactions from where they are originating, where the pin requests are originating, where the password change requests are originating, and all those things we can, as Sumit said, we can literally do in milliseconds by looking at the trends and blocking those trends. Even and in that sense, some of the legitimate consumers might get blocked, but that's okay. That's okay, and you tell them intent-wise, they look like there is something suspicious and we can't do anything about it. Call customer care or whatever you're trying to do. But we should be very, very what is a conservative or very conservative in terms of any time we are taking the money out of the consumers, and that's where real sense prevails.
Yeah, and I think that's the solution to it. And Sujit, what are your thoughts, both from the perspective of problem, and I think Sumit mentioned a way. Sumit and Ajey both mentioned a way to solve it. I definitely think false positives, basically there is a problem of customer experience and false positive. We see that in insurance a lot. But what are your thoughts on both sides, the problem side and the solution side?
So I agree with you guys, right? At the end of the day, this is one. I mean, the evolving cyber threat landscape is one place where I kind of feel like, as an industry, most organizations are reacting and not necessarily kind of getting in front. And the problem with startups is exactly as what you said, right, Amitabh? At the end of the day, I've got $100 to spend, right? How much of that $100 is going towards security, which is, at the end of the day, from a customer's perspective, more utilitarian, and how much do I spend in actually improving my product? So one of the things that at least we as an organization do is kind of have a very marked view of security in the context of what is the security capabilities that we need to invest in, what are the security aspects that we can actually abstract away. To Sumit's point about use of infrastructure, where the security then kind of almost comes bundled out to us, and what are the aspects where we can just consume services and thereby abstract ourselves away from any security kind of exposure, right? So to that extent, one of the things that we also do as an organization is kind of take a very, because it's an element of building out a platform, right? Which is that how much of your investment is going into building a pipeline versus building a true platform, right? And we've kind of driven our ecosystem down to a place where we look and say, look, hey, about 20% of our spend is going into kind of fortifying our environment. And to the extent that it starts to kind of go past that 20%, we know that we are starting to now build a pipeline, right? Impetus for us as an organization to take a step back and say, okay, can we do things differently, right? Classic examples, right? Like we started out and we kind of built this entire ecosystem around KYC, right? But then over time, what we've now started to see is that, there are firms like Onfido out there that actually provide these services. And we at the end of the day, we are a payments organization. They're going to invest more money year on year in kind of continuing to evolve that ecosystem. It makes more sense for us to kind of partner with them, use their services, as opposed to build that capability in-house. Pipeline versus platform. The change from the tech perspective, though, is that then our tech strategy continuously evolves, right? What's a public API versus a private API, right? What are the open endpoints that we need to integrate into versus what we need to keep closed, right? The kind of tokenization we do. So the tech strategy largely continues to evolve. but for most parts, having that view of what we want to abstract away helps in the journey, right? Because
but I think that's always the innovator dilemma. Fine, you build the entire stack, or you actually later on give that stack to somebody else. And I think, and as the industry evolves and matures, those stacks get unbundling and those stacks get matured. Fine, I think, and that's a journey that every startup, everybody will go through it. And I think, Ajey, your point on social engineering is relevant. I think there's a great startup to be created there itself. And I think education might not help, because we've seen that in India, you educate behavior, it doesn't. But I just think the way you described it, in terms of it's a very simple solution, it's a large problem. I think there's a unique large startup just can be built by just the mechanism and the solution that you give. Fine.
Yeah, if you see, right, there are a lot of startups will be coming in terms of creating this peripheral commoditized software, commodity software, peripheral. Like for example, for KYC, for ML operations, for the machine learnings based on payments graph, for things like looking at your payment trends and figuring out what you intend. So there are a lot of ML and data pipeline, data science startups will come soon in India as well, because everybody needs those. And by cooperating with so many people, they'll just get better and better. Like the way cloud is commodity today and other things are commodity today, I think many more peripheral base infrastructure startups will be there in India soon.
Great. So, we're coming to the close of this thing, fine. So, and I'll just go with one question to each of you. And this time we'll start with Sujit. So, we've talked about data, we've talked about AML, and we know that that's a tech that's going to not only change industries, and the impact in fintech is going to be huge. What are other areas that you're saying? Fine, there is we've seen a Singapore India digital infrastructure, both that getting connected. Fine, you can transfer international currency in a second. Fine, you've also seen some things on blockchain. So on trends like that, and this is for the entire panel, how do you see new tech coming in outside AML, something like blockchain, distributed ledger, or technologies that are making just international payments, which used to take days and days, fine, and now can be done in seconds?
So to me, I think blockchain in itself is going to kind of drive the next wave, right? So I mean, blockchain kind of started out with the crypto space, right? But now when you started to look at things like DeFi, right? DeFi is very, very specific to the financial sector. But again, the concept in itself actually holds true across just about every industry, right? We're actually starting to see this for places like, if you look at emerging iGaming in the West, in the US and Europe, right? Building up kind of DeFi-like protocols that actually allow for or enable the iGaming industry already has a lot of kind of interest. So personally, I think one of the trends that I think will again kind of bring that, that fourth wave of disruption, if you may, will very much be blockchain, right? Where I think we'll find continued more use of real-time use cases outside of classic crypto, right? Which is where most of blockchain now typically tends to be kind of concentrated. Like people say blockchain and they kind of think crypto, right? But blockchain will, I think, become much, much more mainstream in terms of just stronger value propositions and better product offerings.
Okay. So Deepak, how are you looking at? You're sitting in a bank and you're looking at multiple banks just coming together in and making this quorum fine. And there is some early on trends happening on banks coming on into a blockchain. What is happening? How do you see new opportunities? If you could give us some perspective there.
So I think I'm quite upbeat about the prospect of decentralized finance, or DeFi as we speak, because eventually it's not about just financial service, but it's also about the data, the contracts, ensuring that the documents, they all flow in. As the goods flow, so is the money. And I think you're able to build, and some of our early initiative, like we have started 16 financial institutions have joined hand to set up a blockchain infrastructure company in India. And the mandate of BIC is to look at creating this ecosystem around the supply chain, trade finance, ensuring that there's a wider participation and create this ecosystem in India. So I think the prospects of these are, I would say, next couple of years we will start seeing some major at scale use cases. And as we start seeing also, the second bet I would say would be around the whole data play itself, which is going to lead to the next wave of adoption of ML and AI. And largely these are emanating now out of health sector, because I see that becoming one of the big ones, be it insurance underwriting or looking at your claim settlement, uh, giving any kind of the loan against some of the treatments which are complex. So I think we see now the financial data, the health data, the tax data, since these all start to come in together in again next 12 to 18 months. This will create a new kind of an opportunity for where there will be data rich companies who will be building the plugins, just like we spoke about a KYC or a security. We will start seeing a lot of data as a service firms who will start creating new products or connectors on top of these new data stacks.
Okay. So Ajay, who owns this data, Ajay? Do the consumers own it? How do they give access? Do you think that will create some sort of fight, or will it be clear rules?
No, so you know that there's DeFi is already there, so consumers do own the data. But on the other hand, what happens with the new innovations? I think decentralized finance is one of the biggest thing which is going to come in. If you look at, for example, if you look at e-rupee, right? E-rupee actually exactly kind of addresses that problem. What Deepak said, like if you got money to spend on say petrol or gas or whatever, you can only spend over there. Same way when banks giving loan for something, they can ensure that it's spent over there. So first thing is decentralized finance is gonna not only make a lot of things better, but bundled with smart contracts, it kind of reduces like your fraud. It makes payments much better. It also does like a very much independent client verification in a lot of sense, right? Because you need a proof of work kind of concept over there. So eventually the consumer really owns the data, and he gives his consent or her consent to use the data. So that is something which is already being done in India stack. So I'm super excited about that. And given that, and if people, we have already seen some companies out there invest which are already leveraging blockchain. Like for example, I shouldn't say Robinhood, but Robinhood is one of those examples. But like Ripple or other things have been doing much better job. So given that, I think digital assets and decentralized finance combined with the smart contracts will change like kind of a financial economic landscape over here. And these things are, I think these things are there to stay, and they're going to become much more mainstream for mostly for consumer benefits, I think. So.
Thanks, Ajay. So Sumit, last question to you. How do you see this tech impacting your startup? Fine. How will you remain relevant?
For us, it's we're just starting off, right? Like, and I think the tech is great, right? Like, I think the combination of data democratization, open banking, combined with already the advances, AI, ML, video recognition, voice recognition, and blockchain has done, allows us, in fact, more an opportunity to build new products for the consumer that literally make it easy, like make finance not boring but fun, make savings fun, and actually allow users to, fun, make life simpler for them, not worry, right? Like today, you go to 10 millennials out there, 8 out of them will tell you they have no clue about their finances. And the tech here actually allows an opportunity to nail that and make it easy for millennials and Gen Z out there.
Oh, absolutely. As a father of a million, I can actually tell you that. And I think we are in very interesting times. I think there is going to be, just getting those unbanked bank, giving credit to people who could not be credited. It's just phenomenal. We're going to be in an era of plentiful. Thanks a lot, panel. I think this was a great session. And I think that with that, we will just sign off.
Thank you. Thanks a lot.
Thanks a lot.
Thank you. Thank you, Mr. Nagpal, and thank you to all the panelists for being a part of this panel again. Thank you to the audience as well for pouring in so many questions and for the great response that you've given to the session. And for the delegates and as well as for our panelists, there's a chance to become a proud owner of the RuPay on the go, which is basically you have to visit the NPCI booth, which is on this platform, and apply for your complimentary RuPay on the go device. So please do check it out. And we will be back with yet another exciting session shortly. Thank you so much.
Thanks a lot.
Thanks, everyone.
Thanks, everyone.